say that other than, man, these tariffs are killing stocks and just across the board. What's up, Ange? They're killing stocks across the board. And I just don't see why they are being placed upon these countries like all at once. It just doesn't make any sense to me, right? And so I just don't see any scenario where these tariffs are good for the market. It just makes no sense to me. So, who am I? I'm Omar Reed. I am an attorney who happens to trade in my spare time. And I have a lot of money in the market, specifically in my retirement account, and I have a trading account as well. Hold on, let me pull this out. Let me pin myself. Bam. What's good, Isaac?
What's up, boss?
All right, so I'm going back to next week or back to last week. What I said last week, you got to learn how to short the market, and I'm going to be doing some bargain hunting. Specifically, I want to buy the best stuff at the cheapest price. Right now, Nvidia has fallen to what I think like 93 bucks. I'm going to start dollar cost averaging into Nvidia next week. I also like Microsoft and I also like Facebook. They do have some exposure to tariffs, but their businesses, at least in my opinion, are a little bit more cut off from tariffs because they're software or like, do I think Facebook is going to lose much more money? Facebook is going to lose money if the economy goes down. People are going to buy less ads, but I think social media is still going to be a thing. I still think everyone's going to be on social media. I think they'll figure out a way to monetize social media in addition to just ads as well. I like Microsoft because they're the enterprise solution. They are what makes businesses run, right? Do I think people are going to cut back on cloud computing? Maybe a little bit, but that's just one of these things I think in the future, like it's a market that's going to keep increasing. And then once again, NVIDIA, everyone is talking about how much money they're spending on data centers. I don't know if you guys have been looking at ChatGPT. Anytime like recently, I've been experimenting with it and it's getting better. And especially with creating images and ads. Like I created an ad with it last week and it looks like amazing. But I've been hearing they need faster GPUs because even the ad that was created, it took about maybe I would say 2 minutes, 3 minutes. I could be wrong, like to generate, where it could still be faster, which for me means you probably still need a faster GPU for that, or to have some other change in technology. But I imagine people are still going to want chips. Data centers are what's powering AI, which is going to end up replacing a lot of labor, which is another reason why, like, just to go on a rant about these tariffs, even if we do bring manufacturing back to this country, it's not going to matter because it's going to be manufactured by robots. It's not going to bring jobs back. Yeah, where if you've looked at or if you've seen Amazon warehouses now, there are a lot of robots roaming around picking up packages and sorting things, right? This is it just doesn't make any sense to me. We're kind of in this information technology era where the next jobs of the future are going to be like fixing the robots or like hooking them up together, not doing the work that the robots do. So I get the need to bring manufacturing back over here, but all at once when we don't have the capacity, it just doesn't make any sense. And they're just raising the prices for everything, and that's why we're seeing stocks fall. Um, Everything is touched by tariffs or just adding taxes on everything, right? Cars. If you could pay a worker $6 an hour in Mexico and they cost $70 in the U.S., like that math just doesn't math, right? The cars are going to be what, 10x more expensive than what they currently are. If you can manufacture a part in China for a few bucks and it costs $100 to manufacture it here, that literally just doesn't make sense. So yeah, it's going to be interesting how these supply chains are shaking up. One company that I really don't like right now with these tariffs is Apple, because Apple is not primarily a software company like Microsoft that does a lot of business with U.S. companies. Apple, um, its whole supply chain is outside of the U.S. And what was happening before, at least the talk, was that people were going to potentially think about moving their factories to Vietnam and these other places, but he's put taxes on them too. So there's nowhere to hide anymore. So does your iPhone now go from being $1,000 to $2,200, $3,000? I think the rich are going to revolt soon, and when the rich revolt, that's when you really have to be worried, specifically from a political standpoint, from the ruling party, um, because they have the means and the resources to do something about it. But if he keeps losing this much money in the market, I'm hoping, like what I said last week, is that this is his art of the deal play, where he takes an extreme position and then comes to the table and actually cuts a realistic deal. But just in the meantime, we're gonna have to deal with these crashes. But for me, I'm bargain hunting right now. I took some money out of my high yield interest savings account, uh, threw in the max for our IRAs this year, which is $7,000 if you're under 50. I think. Don't quote me on that. I am under 50, so I did that for me and my wife, and I sold off ELF. It tanked some more because they have a lot of China exposure too. And now with these 50% tariffs, like, it just makes everything that they do more expensive. I've sold that off. And now I'm looking like with that cash, since these really good companies are now coming to like decent valuations, I want to only buy the best of the bunch, which is going to be for me, I think, Nvidia. I'm still looking at Eli Lilly and Microsoft. Those are my top three, I think, right now. And I already own some Nvidia. I might just average down on that one, um, because it's $90. I said if it got underneath 100, I'll buy it. I'm still unsure of where the market's gonna go, which is why I think I'll probably average in, like, maybe take. I think we have an extra 10 grand right now in two of my IRAs, and maybe take $1,000 each week and throw it into Nvidia or Microsoft. I like Facebook too. Facebook came down to a price that I really liked it at, but right now we just have a lot of volatility. I'm just getting to a point where I think maybe it's all priced in. We had two big down days, and everyone is fearful. And that's when I want to kind of, man, have some balls and hop in to something that I actually want to own long term. When I was willing to buy it $10 higher, let me just grab it now, hold it for 5 years. At least that's where I'm going. And as far as my trading was excellent last week. I shorted Amazon, made $1,200 in one day, because I thought on any pop, there was a pop up, and then I shorted Amazon at the end of the market towards the end of the day. No, maybe it was at 10 a.m. when my alert went off. It was maybe like midday. And then when the market closed, he announced more tariffs, and I woke up the next day at $1,200. Pretty much, I made all the money I could from selling a call spread on Amazon, which is one of the stocks I mentioned last week. And yeah, so my long-term accounts are down, but my trading account is up. And I'm still on that for this week. It's like, from a trading standpoint, I'm all downside until we hear something, from our president. Let's look at some of the stuff long term. Look at Nvidia. Can you see? Hold on, let me make sure I'm sharing. All right, let's look at Nvidia. A lot of these fib levels right now, I don't know if they will necessarily hold, because we are like in COVID territory, right? We had a pandemic that pushed stocks down like this. I would think it, at least I thought previously that it was going to take another pandemic to push stocks down the way that they are. But look at Nvidia. It's the first time I've seen it really start having some weakness. But I love their balance sheet. I love their business. I don't see a flaw in their business model. They're a necessary evil. The only thing that's going to hold them back is the government telling them that they can't sell to other countries. But Nvidia makes a lot of money. It's been growing quickly, and it's 40% off right now. Right, it's 40% off. So I like it. I'm on Monday. I think I'm starting a dollar cost average on Monday. I'm just gonna bite the bullet. I'm hoping it's still like what it's at 90, and after hours it's at $93. I like this support right here at $90. I think the current bad news related to tariffs is priced in, but who knows what could happen, which is why I'm not going to put an entire position on. I think I'm going to split it into tenths personally and think about dollar cost averaging in as long as it's under $100 for like the next like couple of months. That's how I'm going to play it personally on Nvidia. If it had maybe on big red candle days on Nvidia, I'll throw some more money in, right? And I'll probably be looking at that every, you know, every week for the next month or so. Like if it has a big red candle day, let me throw some money in. If it has another big red candle day, let me throw some more of that money in. But split it into like tenths or whatever you might want to do, right? That's just how I'm playing it. Let's look at Apple. This is what I was saying with Apple. Their supply chain. Look at that. Look at that massive red bar. That's the and my prior point to potentially start swinging Apple was around 183, and it almost got there, but like I don't until there's some more clarity on the supply chain, and I know like Apple's most of their factories were in China, and then they were building other factories in other countries, but guess what? There's tariffs there now too. So I don't see how Apple doesn't have a $2,000 iPhone unless there's some reversal of these Trump policies, which there may be. But I just another point is people with money are just going to sit on the sidelines until there's some more stability. And so that's what's going to prevent a lot of commerce from happening. Like, if you're Apple, if you're Microsoft, if you're TSM, are you really going to be spending? Let's say you do have a big cash position. You're Warren Buffett. Are you really going to be spending a lot of money right now when things are uncertain, or are you just going to wait till the dust settles? So that's another thing that's just going to limit economic activity. It's not that people or some of these companies don't have money or cash, but this is not going to be a great time to deploy your cash. You don't know if you should deploy it in Vietnam, Mexico, or China or America. But you know if you deploy it in America, your iPhone's going to be 10 times more expensive. So you just got to figure out like who's going to cut the most favorable deal with the administration, and then our massive companies going to start moving their manufacturing there. Because I just don't see, unless American workers are going to be willing to work for $6 an hour or below, when in California the minimum wage is going to be $25 an hour over the next few years. I don't see how it's possible to manufacture iPhones in the U.S., at least not all of the components and parts. Yeah, so Apple, I'm staying away from Apple. They're not in the AI race. They do have the best phone, but that just got a lot harder, you know. Let's look at Microsoft. And this is all from like a long-term standpoint. I do like Microsoft. It's getting closer to where I wanted to catch it, which is around 340, around that 200 moving day average. I like that they're in the AI space with ChatGPT. They're the largest investor in ChatGPT, which is reached, I think, what was it, like $130 billion valuation in their last fundraising round. So I love Microsoft in the space. That they might even be coming up with their own ChatGPT competitor. I love them in the enterprise space. Cloud computing is just where they're making most of their money on Microsoft Azure. They're making money. Microsoft just knows how to make money, especially in the enterprise space, to sell to businesses. Yes, they're going to take a hit because if businesses lose money, Microsoft is not going to make as much. But I think even in a business where you're cutting costs, you can't cut your infrastructure. So it's going to be very hard for you to cut your cloud computing space if all of your data is in the cloud. That's not going to be the thing you cut. You're going to cut labor. You're going to cut like office expenses and things of that nature. I don't think you cut your infrastructure. I'm not, like, a lot of my stuff runs on Dropbox and Google Drive. I'm not cutting Dropbox or Google Drive even if my business starts losing more money. Like, those are things that are necessary for me to run a business. So that's why I think Microsoft is going to be pretty safe in that aspect. But I'm looking at it at like 340 before I start averaging in, just because this is my prior price anyway, right? And then, so we did NVIDIA, Apple, Microsoft, Facebook, Meta, my bad. Love Meta. The only issue with Meta is going to be, so Meta makes a lot of money from e-commerce folks. It just got a lot harder for e-commerce folks that are ordering products from China and Indonesia and all of these other countries, Mexico, right? That just got a lot harder. Their supply chains just got rocked. They were already preparing for those 10 to 20% hikes on China tariffs that were announced previously. Now the government's saying it's 50%. So their business models are broken now. They don't work anymore, a lot of them. So I assume a lot of them are going to be pulling their spend on Meta if their CAC to LTV ratio, their customer acquisition cost to lifetime value, customer value, don't make sense anymore if their products are now 50-60% more expensive. So that's why I think Facebook and Google, for that matter, have taken a hit. But from a social media standpoint, do I think less people are going to be on Instagram? No. Do I think less people are going to be on YouTube? No. Do I think less people are going to be on Facebook? No. WhatsApp? No. So from a usage standpoint, I think Meta is going to still hold up. But same thing, if I'm going to get into Meta, I would start dollar cost averaging into this puppy. I'm not going to blow my whole load at one level. I'm going to split it into quarters, tenths, or whatever, and on big red candle days, I'm going to try and get in. But those are, I think, my top 4. Let me go look at anything else. AVGO, too, is another one. Does a lot of networking for the data centers, so everyone is building data centers, and then they help you network them together. Almost 50% off. I like that big bounce off that 140 level right there. That would be another one I would think about dollar cost averaging in. But I think NVIDIA is the top player in the market, so I'm going NVIDIA over AVGO personally. And I already got some exposure to AMD and ASML as well, right? So sorry for the baby in the background. All right, let's go back to... All right, so what am I looking at to swing next week? Just with my disclaimer, once again, this podcast, this video is for informational purposes only. As you can see over the last few weeks, investing and trading is risky. Do so at your own peril. I am not a professional advisor. I am not a financial advisor. You should refer your investments and trades to your financial professionals and do your own research, right? Ideally, this enables you to do your own research. So how did I have my big Amazon trade last week? Shorting the market, essentially, by selling call spreads, which is all I'm really doing right now. The only thing that I think I would have some upside on would be gold, but even gold dropped a little bit on last week. So the market just looks bad, right? And it looks bad due to just the uncertainty. So Koifin.com is what I use to go figure out what the sectors are. I go take the last month, and as you can see, everything is down. Even the gold miners that were up and doing really well, that came down 10% in one day, right? After these tariff announcements. So everything is doing terrible. The regional banks are down almost 20% in the last 30 days. The chips, semiconductors are down almost 20% in the last 30 days, right? So what did I say last week? We start, hitting bear territory and bear market when there's been a 20% decline. Well, we're there for a lot of stocks, right? Over the last, especially the last quarter, like from where we came from here, we're in bear territory. So what am I shorting next week? Once again, if I see a big pop up in the Russell through IWM, I'm going to short the Russell. I'm going to short the KRE. And if you would have listened to me last week and shorted the Russell, you would have made good money. Really, if you would have shorted anything last week, you would have made good money, right? The Russell, semis, uh, oil services was down, but I don't really trade anything in there. Tech in general was down. Financials got killed, and they have earnings coming up again. XME, right? So if I'm shorting anything, I think I'm shorting the Russell. Same thing I said last week. I'm shorting the Russell. I'm shorting semis. I'm shorting tech. I'm shorting consumer discretionary, which is Tesla, Amazon. I didn't want to short Tesla. Tesla was showing a little bit more strength because it had already fallen so much. But Amazon hadn't fallen as much, which is why I took that and then worked like a charm and XLY. So any big pops, I think, on most of the market, but that's the direction that I'm heading in next week. I'm not even going to go into most of the stocks. It's really just the same thing. Just don't short anything that's been exhibiting any strength. Like, I'm probably not going to short Tesla because I think it had fallen 30% before these new tariff announcements, right? So it was already down. And it was down so much where I think it was too crowded to the downside. So I wanted to pick something else, and Amazon worked, right? So, uh, yeah, figure out if anything pops up next week, which I feel like there are going to be a lot of bottom feeders like me next week that are just saying, hey, if you had a bunch of cash on the sideline, which I did uh, my high interest yield account and just my trading account that goes to zero pretty much every week when I get out of a trade, that I just have some cash sitting on the sideline. I'm thinking about deploying that cash slowly to see if maybe we keep going down and dollar cost averaging into some really good companies, only really good companies, nothing else, over the next couple of months. And hopefully this spring does what it usually does. We see it bounce and start climbing a little bit. I'm hoping that what the administration is doing is taking this extreme negotiating position to try and bring all of these countries to the table, and then it's going to reverse itself as all of these wealthy people that voted for Trump and that supported Trump are saying, hey, bro, my retirement is not looking good right now. I'm losing millions or billions off my company right now because of these tariffs. And like pick a company or pick a country. Pick China. Pick on China. Don't pick on the whole world. Why are you picking on Canada? Why are you picking on Mexico? Why are you picking on Europe? Uh, yeah, that's my rant for today. Yeah. Any suggestions, solutions, comments, concerns in terms of what's happening next week? Short the market.
Yeah.
Right?
And so,
That's my
sorry,
gospel for
I was
today.
sorry, I was on mute. And so just are you saying, Shorty, just continue to do it with call spreads? Is how you're gonna do it?
What I regret last week was not, like I said, what I was going to start doing with the strategy was selling call spreads and maybe having a couple of puts. If I would have actually bought puts, I would have made more money because call spreads are less risky, but I like put a cap on what I can make. The cap on what I can make from that trade I took was $1,400. If I would have bought some puts, I could have potentially still been in that trade and could have made way more money. I could have made like probably 5 grand or whatnot, if I would have bought all puts. So I'm thinking about using that as a hedge for my long term. So if we're going to keep going down, I can take some more risk on the trading side by buying like a mix or selling a mix of call spreads and buying puts at the same time on the same stock. That's what I'm doing, so that I have some risk adjusted stuff, and then I got some more volatility where if it takes off and we keep tanking, I can make 5-10 grand off one trade rather than 1,200. Feel me?
I think so.
Yeah. So just like how I would position that, just to kind of show you how I would position it. Where are we? So let's say what's some everything is terrible right now. Let me go look at SMH though. Except energy. Actually, energy still doesn't look that bad. That might be the thing that actually pops up. But look at SMH. Terrible. Let's say if I wanted to short anything right now in SMH. What looks the worst? AMAT looked bad before. I definitely should have shorted that. No, AMD. Let's say NVIDIA actually looks really bad. NVIDIA and SMH. Let's take NVIDIA because it's going to be liquid. Go to the option chain. So this is if I'm selling call spreads, I'm going to want a closer expiration date because I take advantage from time decay. Time decay comes off the option even more when you get closer to expiration. So why does the option chain look like this? We might, NVIDIA might be a bad one. It might be because we're after hours. Let me do Amazon again. Let me just show you what I did on Amazon. Yeah, Amazon looks better. So what I did on Amazon is I sold a call spread on these April 17 expiration day, just because I know this is the third Friday of the month, tends to be the most liquid. So I did something like this. Bam. Right. Sold, I think it was at like 177.5 at the time, right? But let's say this is the one that's in the money. So I sold the one that's in the money and then bought the two out the money, right? And then I did a $1,400 budget. So I bought 6 at the time. I don't know what the price is. I think it was like $230 or something. So I bought 6 or I sold 6. In this case, if it's $2 at the time where I wanted, I would sell 7. Just because that's my budget. It's $1,400, right? So that's how I would get in. But see, what I would do next time, or what I wish I would have did, was maybe only sell like 3. So that's maybe 3 of these $600, and then maybe buy a put further out. These are really expensive though. Amazon puts are expensive. Hypothetically on a stock, yeah. Well, we could even do the 17th. But I would like buy this put right here separately, 1 or 2 of those that are going to be like a little bit more volatile because time decay is going against me. But if things work out, like I can make way more money off of, let's say, these 2 puts that I'm buying versus the 3 call spreads that I'm selling. So I might combine those into one trade. So I got a mix of, when you sell a call spread, there's limited, like you have a risk. Like you're not gonna. It's harder to go to zero because even if the stock stays stagnant, you're making money off time decay. You're essentially selling premium. So you're selling premium to the downside, right? This is a downside trade. And you hope it keeps going down. You'll make more money and the premium will come off faster if it comes down. But you can only make the premium that you sold. So if I sell four of these, I can only make $800, right? And I can only probably lose $800 too, right? We confirm and send, and you see the max profit is $800, max loss is 1,100. Um, it depends on the time of the market. Usually those are about like 50-50, right? Your max profit and your max loss are going to be about the same, approximately, give or take like $100. But that's all you can make is $800. So if the market keeps tanking, it doesn't matter. Your max is $800. So with puts, you don't have like a max other than if it gets all the way the stock Amazon goes down to zero, which is far away from zero. So hypothetically, you could make almost an infinite amount of money buying puts if you hold that all the way up until April 17th. So like if I would have, let's say I sold 6 Amazon call spreads last week, if I would have sold 4 and then bought 2 puts, I could have still been in that trade. And that trade is kicking ass right now because the market is down so much. Right? I had bought the Amazon, or I had sold the Amazon call spreads when it was at 196. It's at 171 right now. I could still be in that trade making a few $1,000. So that was my mistake. If there was a mistake last week, I did win that trade, but my mistake is maybe not throwing in a little bit more volatility into that trade, and I could have still been up a few thousand, which would have helped me stomach some of the losses in my retirement accounts right now. Which is what I'm trying to do right now, is maybe trade the downside so that I could stomach losses better than everyone else can. So when the market starts coming back up, I can hold because I'm doing better in my trading account. That's my plan right now. Actually, let's look at that's the last one that we didn't look at. Let's look at Amazon. Amazon is actually something that is going to be around for a long time. The issue is all of the people that sell things on Amazon get their stuff from China and a lot of these other places. That's why you can get paper for a few bucks on Amazon and it'll come today. That's why you can get pencils and things that we don't manufacture a lot of in the U.S. because we're more of a service-based economy. Right? Amazon, a lot of their sellers are now trying to figure out how to make their business model work. A lot of these retailers were already on 8 to 20% margins for the best retailers, and you add a 50% tariff on their goods, that just ate up all their margins. Their businesses don't make sense anymore. So they gotta pause. They gotta lay off people. They got to figure out how they are going to manufacture things at the same margin. Let's say, because I sell books, but see, this is why I'm happy that I don't manufacture books. I'm just gonna pass the price on to the consumer. But if I if I manufacture books, and I was buying them for $5 and getting them from China, let's say all inclusive per book with these massive orders for $5, and I was selling them to host or to retailers like myself for $10, and now you just made that $5 product $10 because you just increased tariffs in the entire world. What am I gonna do? I can't. What am? Yeah, I have to change my business model, or I got to raise my prices by 50% or 100%. Now I got to sell that book for $10, which means that the retailer now, well, no, if I was selling it for $10, now I got to sell it for 15, and now the retailer has to sell it for $30 to keep their margins, which is what companies do, right? At my bookstore, I need to keep at least 50% margins for it to make sense, and that's gross margins, not net. So if you sell me a book as a wholesaler for $15, I'm going to sell it for 30 retail value. I'm going to mark it up. So everything is going to get more expensive, right? And Amazon is one of these parties, I think, like Apple, that's hurt a little bit more by the tariffs than, let's say, an Nvidia, a Microsoft, a Facebook. Even Facebook is pretty affected. But I just like the fact that Amazon is close to 50% off. I would love it here, though, maybe at like 155. But once again, it's getting close to 50% off. I think this is a good time to start exercising a dollar cost averaging in and or selling puts for the wheel strategy right now. If you want it, let's say if we have a really bad down day on Amazon and I want it at 145, maybe I decide to sell some cash secured puts and make some money if it pops up from there in the meantime. I think the wheel strategy would potentially work right now, especially if you actually want to hold some of this stuff long term and is getting to a price that you would be comfortable with. Make some money on the downsides. Sell some cash secured puts. So if it comes down to your level, sell some premium. You can get your price down a little bit more, right? But in order to do that, you need to have a little bit more of a budget because remember, your account's gonna hold the money for having 100 shares. So make sure it's something that you can actually afford, right? Because if you're selling cash secured puts on Amazon, they're gonna want you to have 17 grand in your account for one. But man, some of the premium is good right now because of the volatility. You sell a cash secure put on Amazon right now, you can make $800 if it doesn't hit that level, right? Or even out of the money, you can make a quick $400 and potentially only get assigned if it goes to 160, which is a pretty good level for it, right? Especially if you get a big drop next week on something like this, and then the 150s, you can get like $500 of premium at the 150s. Might be worth it to grab Amazon at 150 if that's where you want it, right? Just some creative ways to get into stocks, potentially to make some money. So if you don't want a dollar cost average, you want to sell some premium because you think things are going to go a little bit lower. And so if you sold that, let's say if you sold that put at 150, you can make, let's say on a down day next week, let's say Amazon has a down day next week and that 150 is around where that 160 is. And let's say you could sell $430 worth of premium. So that would essentially get your cost down to 146-ish if you actually get assigned, right? Because you make the premium, and then if it drops down to 150, you have to buy the shares. But because of that premium, your real buy-in price is actually close to the 146, right? So just to create some creative ways, like if the stock market is tanking, but you think it's going to go down a little bit further and you want a better price, you can actually make some money like selling cash secure puts on the way down. So also something to think about, but just remember cash secure puts are expensive, but you could do that on something like Nvidia too, right? If you really want Nvidia at you could go make $240 selling cash secure put on Nvidia, and Nvidia is actually not that. Actually, that's probably how I'll get in. I think that's what I'm gonna do. I think I just convinced myself because Nvidia is at $90 right now. So if I had to get assigned Nvidia, that would be only $8,500. I got enough in my IRA right now after selling ELF. So I might, see if I can make $240 throughout the week, maybe even at this 90 mark, $390, and get my basis price down. If I get another 100 shares, even at a 90 strike, that would be around $86, which would be my all-in price for those 100 shares, right? Because I'm adding in the premium that I'm selling. You feel me what I'm saying, Ange?
Absolutely.
Right. So I'm thinking that might be what I do because I really want some more Nvidia. I just think Nvidia is going to be a winner over the next 10 years. So I'm thinking about just loading up on some more Nvidia, and I might do that via cash secure puts. Where if I do that, then at least if I get assigned, I'll own Nvidia at like $87. Or if I take this one, that one's even safer. Because look at the volume there. Everyone's doing the same thing at this level. Look at that volume. These are like little tells for me. Where's everyone else parked out? That's crazy, right?
So at that point, they're buying puts right there.
Well, yeah, there's a lot of volume. A lot of people are buying or buying or selling. See, the thing is with the open interest and the volume, you don't know what side of the trade they're on. They could be on the buy or the sell side, but it just tells me there's a lot of activity there. Like a lot of other people are thinking about doing the same thing. But like that's some pretty good premium. You can make $240, and if you do get assigned, you get assigned at Nvidia at $85 minus 240, so at like $83. I think that's a great deal. To be in Nvidia, have 100 shares at $83. I think that's a good deal for me right now. And then worst case, if Nvidia pops up, that's good for what I currently own, and I just get to keep that $240 and make some cash off my retirement. You know, within a couple of weeks. You feel me?
Yeah, I like that.
Right, as a play. So make $240, and if we stay like flat like this, I'll keep doing this for a couple of weeks, a couple of months. Just keep doing it. Make $240 off Nvidia in my long term, and make some cash on the way down. Just as a strategy. But I'm thinking this is the play for me, especially anything that has like really expensive premium right now. Meta too probably has some really expensive premium. Yeah, you can make $1,600. Oh, but Meta's really expensive. You got to have 50 grand for that. Nvidia is under $100, so anything under $100, if you have a smaller account, is gonna be like a better play. So yeah, Nvidia I think is that for me.
Yeah, when you said Met, I was like, oh,
Yeah.
that gets called.
Yep. So yeah, Nvidia from a cash outlay standpoint is going to be a safer play to do a cash secured put strategy on right now. But yeah, that's it. That's all I got for y'all this week.
Man, appreciate it. I'm about to look at that on Monday for
Yep.
sure.
Yep. Even set it up tonight. Just figure out where you want to get in. Like I'm looking
Yeah.
at it and I'll set my alert. I just want to see what the market does. Do we have a big bounce come Monday, or do we keep heading down? If we keep heading down, then I'm really going to be interested in doing like a cash secure put. Or do we finally have a sideways day? Shit, I would love a sideways day. Just a consolidation, like a pause. Can we get a pause?
Are we still consider a bull market?
Nah, I think we're in
Not
bear. I
anymore,
think
right?
we're. I'm personally in bear territory. That's why I'm saying short everything on
That's
pops.
what I'm saying. Everything getting there. They talking about correction. No more of that.
Nah, we in bear territory until we just it's the tariff thing. It's like he's what I want my president to do is get out the way, and he's in the way right now. And so like I know the tariffs did that because literally once the news came out, if you go look at the 5 minute chart on all of the indexes, they all fell right after the news. So like from a causation standpoint, it is the tariffs. It's the uncertainty. If he had had a plan, if he was announcing ahead of time, this is what he's going to do, then people can prepare. But if I'm manufacturing, like our whole economy, like our goods and services, like they come from other countries because labor is too expensive in America. And so, unless the price of everything goes up, every business right now, like they have to figure out like what their supply chain looks like. Other than people maybe in the information technology sector, they have to go look at their supply chain and go like, okay, if I can't manufacture in China and make a profit, but then he's telling me I can't manufacture in Vietnam either, or Indonesia or whoever, where am I going to get cheap labor from? And if I can't get cheap labor, I can't sell this product to Americans, right? That's just, yeah, that's what it, or everything's going to go up fivefold, tenfold, right? And that's inflation, but not inflation like natural inflation, inflation due to tariffs. So that's. I just thought he should have pick an enemy. You don't want to have a multiple front wars. Pick an enemy. If it's China, okay, we can deal with a tariff war with one country, not with the entire world. So yeah, it just doesn't make any sense to me. The last time we did this, we had a massive depression in the 1930s, right? So it's like we know that mass tariffs aren't great things for the market. So I just, unless you want to decrease wages here, I don't. I just know the average high schooler wants to be a TikToker and a YouTuber. They don't want to be picking grapes in fields and manufacturing iPhones in factories, right? That's just not something that your kids want to do, right? So I don't. It doesn't make any sense to me. But anyway, that's it. That's all I got for this week. Mokama Sunday service, making it rain without the umbrellas. If you get an opportunity on Pops, if we get a big green candle day, try to pick a level that looks good and short the market. That's where the trend is right now. And for me, I'm following the trend until we start seeing some sort of stability from a political standpoint. And I'm like, this is not a political show. I don't care who the president is. I just want the president to be out of the way. And sometimes politics does affect economics, and right now that's what's happening. So with that said, uh, tariffs equal bad. So just so everybody so everybody can understand, tariffs equal bad. Right? Let's go back to my slide. Right,
Straight up.
right here. If so, everyone can understand. That's what I'm going to end on. Trump tariffs equal bad. That's it.
I love
Yeah.
it.
All right. I'll see y'all later.
Peace.
Peace.